that 900 trillion is getting debased every year, everywhere, because money supply is growing. So as Preston says, there are more monetary units chasing the same goods and services. And so, as that 900 trillion starts to worry about their debasement, they're going to start to choose a form of money that can't be debased. And they really only have three choices, Bitcoin, gold, and silver.
Yeah.
And so, all of which represent money. And so, that is going to, in my opinion, drive the price of all three of those assets to levels that people today can't even imagine. A lot of people have really suffered and continue to suffer in this economy. I mean, and yet the 1% continues to get wealthier because they print money to support the asset values that they have. So it's not good. I mean, it's really not good, and it's not hard to see.
Lepard emphasizes the massive scale of fiat-denominated assets, estimating that around $900 trillion are tied up in cash, bonds, stocks, and real estate. In contrast, Bitcoin's current market value sits at only about $1 trillion, with gold valued at roughly $12 trillion, though much of it remains locked in museums or jewelry collections. This stark contrast highlights the undervaluation of Bitcoin and gold relative to the vast fiat system. As governments globally expand the money supply, more monetary units chase the same amount of goods and services, inevitably leading to inflation and currency debasement. Lepard stresses that fiat currencies are constantly losing purchasing power, creating an urgent need for individuals to shift their wealth into assets that cannot be devalued at will. He identifies Bitcoin, gold, and silver as the only real alternatives to fiat, all serving as stores of value that are resistant to inflation and government manipulation.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
There's $900 billion of fiat assets, right? I mean, real estate, stocks, bonds, cash, you name it. And there's $1 trillion or $900 trillion of fiat assets. There's $1 trillion of market value in Bitcoin. There's about 12 trillion, maybe a little more now that gold's up in gold, but really only about half of that's for sale because a lot of it is in jewelry and museums and so forth. And so call it 6 trillion. I mean, that 900 trillion is getting debased every year, everywhere, because money supply is growing. So as Preston says, there are more monetary units chasing the same goods and services. And so, as that 900 trillion starts to worry about their debasement, they're going to start to choose a form of money that can't be debased. And they really only have three choices, Bitcoin, gold, and silver.
Yeah.
And so all of which represent money. And so, that is going to, in my opinion, drive the price of all three of those assets to levels that people today can't even imagine. And I get it because, they look backwards and, fiat has been relatively stable for a relatively long period of time. I mean, the U.S. hasn't had hyperinflation since its founding, and it had high inflation during the wars, and particularly the Civil War. But, people they look backwards and think, well, I'm good. This is America. This is the dollar. It's going to be okay. And yet, if you look at the policies that we're following, if you look at the deficits that we're running, if you look at the way we're printing money to support those deficits, these are the kinds of things that when they're done in other countries that don't have the world's reserve currency, they lead to inflation, sometimes to hyperinflation. And we're doing the exact same things. Now, other people say, well, we've got all the military, we've got all the guns, blah, blah, blah. Well, fine. But unless, we want to start a world war and force people into using our money, which I don't think we're going to do, people have the choice on what money to use. And everyone has a choice. Everyone wakes up every morning, they can decide, where am I going to put my savings? And we're going to leave them in the bank. We're going to buy a bond. We're going to buy a stock, whatever. Or we're going to buy gold, silver, or Bitcoin. And, look, some Americans are figuring it out. I get a kick out of the fact that Costco, every quarterly report I try and listen to their earnings report. And they talk about how many gold bars they're selling.
Oh, yeah.
So, people would say these average American Costco shoppers, I know I shop there, I love the place, they're buying gold, right? Why? Well, because they kind of know that it can't be debased, right?
Yeah.
And so, that trend, I think that trend is going to continue. So in my view, Bitcoin has no top and gold and silver have no top because fiat really has no bottom. I mean, if it sounds extreme, but I think it's possible. I'm not saying it's a likely case. I think it's a tail case. It used to be an extreme tail case. It's becoming less extreme, but there's a tail case that says that fiat currencies all fail. And under what time frame? Unclear. Certainly could be many, many years. I tend to think it might be faster than that, but I don't want to try and panic people. But my point is that you don't even need fiat to fail for Bitcoin and gold to be very, very good investments on a comparative basis. I mean, since 2000, gold has outperformed the S&P, 500 by quite a bit. And everyone points to the S&P as being your best inflation hedge. It hasn't outperformed the NASDAQ. I mean, the technology stocks have done much better than gold. But there you've got risk. I mean, unless you're dealing with the monopolies. I mean, it's the digital monopolies really are kind of something to behold in terms of the quality of their cash flow stream and the defensibility of their positions. I mean, perhaps someday there'll be something other than Google, but right now, it seems to be they've got one of the most defensive moats I've ever seen in any business. In a debt-based system where you need debt for growth and you need to service that debt, and the underlying productivity and GDP is not growing at a rate that's fast enough to support the debt, the only way to fill the blank or to make the numbers square is to print more money. And which you can do, and we've done, and it's not uncommon. But by definition, you're not printing goods and services. So you print more money, you have the same goods and services, we're all competing for them. The cost of those goods and services is going up. And so that's the underlying problem. And really, there's nobody in Washington talking about how to address it or solve it, which is very unfortunate. But, like I say, I'm hopeful that, things like, my book, other books, knowledge, I mean, even the mainstream is starting to say, talk about this a little bit more. I mean, you're seeing it creep into a lot of different discussions. And I think, in 5 or 10 years, it's going to be common knowledge that this monetary system is broken. And, right, just completely broken, FUBAR. And so
the revisions kill me. I mean, I just can't even.
Yeah, right. Oh, yeah. No, it's. Don't get me started on government statistics. I mean, I like Saylor's view of it. It's just like, why do you pay attention to any of that stuff? It's all just nonsense. He's right. It's all just complete nonsense. I mean, arguably, we've been in a depression since 2008. I mean, a lot of people have really suffered and continue to suffer in this economy. I mean, and yet the 1% continues to get wealthier because they print money to support the asset values that they have. So it's not good. I mean, it's really not good, and it's not hard to see. And I think you would agree, probably, I'm sure, in your interactions with people on day to day. At least the world is becoming aware of it, much more aware of it. And everyone reacts in different ways, but you've got this mob boss who runs the Teamsters, or the longshoreman, and he's like, hey, you guys all got yours, I'm getting mine.
Lepard expresses frustration with the rivalry between gold investors and Bitcoin advocates, arguing that both groups are fighting the same battle against fiat currencies. He emphasizes that gold and Bitcoin each serve different purposes, gold offering stability and protection from volatility, while Bitcoin provides higher growth potential but with greater price swings. According to Lepard, the key enemy is not one another, but fiat money and the entities that benefit from creating money without proof of work. He warns Bitcoin investors about the dangers of chasing price rallies and panic selling during corrections. The only real mistake, he says, is to buy high during a spike and sell low during a downturn. Educating investors on Bitcoin's volatility is crucial to prevent them from making emotional decisions that could result in losses.
Before the Bitcoiners, the original hard money people were gold bugs. There was no other choice, right? And we were all Austrian economists. We've all read the books and know the story of fiat and understand the corruption in the system. And I understand it. I mean, some of the gold people are very frustrated that Bitcoin came along and stole some of their thunder, but they're not mutually exclusive, and there's a role for both. And I get angry at Bitcoiners when they shit on gold people. I get angry at gold people when they shit on Bitcoiners, because we're all really fighting the same monster, which is the people who have, that create money without proof of work. They just, click a key on a computer keyboard and money appears. And surprise, their friends benefit from it. What a shocker, right? And so we've all got the same enemy, which is fiat. And And they each have a role. I mean, if you're 80 years old and you're trying to preserve your wealth and you want to be in something that's not fiat based, you want to have some form of cash or money that will not disappear through debasement, and you don't like volatility, then gold's a pretty decent choice for you versus Bitcoin. It certainly is going to underperform it massively, as it has, but it's not going to decrease in real purchasing power. It never has. And in the maximum drawdown, I think there's 1 year it drew down 30%, but most of the drawdowns are very modest. And as you and I both know, the Bitcoin world is a very volatile world. And the one mistake I see some Bitcoiners making is shoving people into it without telling them or explaining the volatility and preparing them for the volatility. Because as you and I also both know, the only mistake one can make in Bitcoin is you chase a rip,
yeah,
and you buy it, and then it corrects, and you freak out and you sell it. Yeah. That doesn't work. But I mean, here's an interesting point. He was able to negotiate an 8% raise over, I think, the course of 6-7 years. I mean, 8% is a long way away from the 2% target that the Fed holds.
Yeah.
So for the Fed to argue that, look, they have to run a negative real rate environment for a long period of time in order to grow GDP to a point at which it can support the debt. They absolutely have to. And so, this is a point that's well made by Luke Groman. And so, at the end of the day, they're going to, because they have to, they will. And what that means is, as Groman says, is the sucker at the card table is the bond market.
It's a bond, yeah.
And the bonds, who would want to own a long-term government bond in a government that is bordering on, if not completely bankrupt?
Right?
Yeah. I mean,
it's a nightmare.
It makes no sense. And so eventually the bond market will go the wrong way. In fact, I thought it was interesting. The Fed just did its first 50 basis point cut, and yet the yields on the long bonds all went up, right? I mean, it's like, that's interesting.
It's interesting.
People are losing faith, right? And so, that's to me. I mean, the things, I've said this in other pods. The thing to keep your eye on is keep your eye on the long-term interest rates, keep your eye on the price of gold, keep your eye on the price of Bitcoin, eye on the price of silver. Keep your eye on the dollar as compared to other fiat currencies. I mean, all of those things will tell you that the world is, how the world is waking up to the problem. I mean, I think Nick Timieros tweeted from the Wall Street Journal, he did a victory lap of how the Fed has landed the plane with a 2% inflation and they're cutting rates and everything's good. And I replied, I said, okay, Nick, if that's the case, then why is gold at record high prices?
Right.
I mean, gold is hitting all-time records in the 2,600 area. I mean, not that many years ago, gold was 1,360. I remember it well. So, gold's price has doubled here, in the last 5-6 years, 7 years maybe now, and yet, they claim that we've got inflation back under control, and the gold market's calling bullshit on that. And I think soon the Bitcoin market is going to call bullshit too. And then we'll see what happens. I mean, we'll see what the response is to that.
Lepard believes that fiat currencies could potentially fail, a scenario he describes as a tail case that is becoming less unlikely over time. Even without a total collapse of fiat, Bitcoin and gold are poised to be excellent investments as fiat currencies continue to lose value. Gold has already outperformed the S&P 500 since 2000, demonstrating its effectiveness as a hedge against inflation despite the tech sector's more impressive gains during the same period. Lepard concludes that in the coming years, more people will recognize the flaws in the current monetary system. As awareness grows, the shift into Bitcoin, gold, and silver will accelerate. While governments and central banks show little interest in addressing these systemic issues, knowledge and education among individuals will drive the adoption of sound money principles.
Please like and subscribe my channel.